Why pay more for your precious metals from the big guys with offices on Wall Street and who bank with JP Morgan? Get your fizz from the doc at sdbullion.com.
This is the Doc and Eric Dubin with the SD Weekly Metals and Markets. Well, after a little bit of excitement early in the week, gold and silver nearly unchanged for this week, particularly in gold closing on the access market today, just about $13.97, unchanged from last week, $13.97 and change. Silver down about 35 cents today, closing the access market at $23.53. So silver was down just under $1, I think around 75 cents on the week. Regular listeners, last week Eric and I had both looked for a slight pause in silver's big, nearly 40% rally as we cleared 25 and neared the, I think we gave a range of about 25 to 26, and just short of that, about 25.20 or 25.23, I think, was the top early on Wednesday, Eric. So it looks like we're seeing that little bit of a correction that we were anticipating, down about $1.50 here Wednesday afternoon through Friday. I still don't think the correction will be too long. What's your thoughts, Eric?
I agree with that. I think that we'll come out sometime next week, maybe Tuesday, and start moving forward on Tuesday. It should be pointed out that while it's normal for a correction to have taken place after such a large move in both gold and silver, and we're not the only ones that know that. The cartel knows that as well too. And when we started moving down on Wednesday, just slightly, and then taking it really hard next 2 days on Thursday and Friday, and we're recording this again on Friday as we usually do, it's very clear that the cartel pushed the shares market down, the mining equity shares, and I had put out an alert about this when I first noticed it on Wednesday. And the contrast on Wednesday in particular is very striking because during that period when the shares started going down, the bullion prices actually kept going up and up, even through the access market trade, which was indicative, in my opinion, and I can't be 100% certain at this point because it's a little early in the day, or early days going when it comes to taking in all of the data, but the price action worldwide strongly suggested that there was a lot of buying of physical coming out of the Middle East because we're getting ready to have a war over there, as well as in Asia, and it countervailed the force that typically is put on by the cartel. And, when Andrew McGuire testified before the Commodities Commission and spoke about how JP Morgan uses signals as opposed to concrete emails and telephone calls and whatnot to indicate what it's going to do with traders. One of the telltale signs that we have seen as a signal over the last 10 plus years, not just with JP Morgan, but just generically with the cartel, has been use of short selling and naked short selling of the gold and silver equities in an effort to control sentiment and push it down, but more to the point, signal to their hedge fund compatriots and whatnot who may or may not be on the same song sheet when it comes to directly understanding what's going on, but they follow these patterns and they recognize it. I mean, if I can see it, they certainly can see it because they've got a hell of a lot more powerful computers than I do.
And we're not talking 1 or 2% here. We're talking a good portion of the shares down suddenly over 10% while the bullion's still up on the day.
And for no apparent reason at all. You had the general stock market going up. You had the dollar being copacetic in terms of, signals from vis-a-vis what it might do or might not do in terms of pressure on gold and silver. Gold and silver were going higher. Physical was buying all over the world. And then all of a sudden, come around 1 to 2 or so in the afternoon in the New York session, boom, the equities start falling down. And this is a pattern that's happened over and over again. And when it came to Thursday's push down, it showed that the cartel really was in for some serious business. They pushed a lot of stocks down, like 10% or so. And when that happened, it was a reiteration of the same signal that they've used before, and then finally gold and silver sold off very, very strongly in the second half of that day, and then going into Friday, we saw another crash. And, folks, all you have to do is look at the 72-hour chart that Kitco publishes. Look at it for silver. Look at the patterns of the 3 days, the 72-hour period, and you can see how in silver in particular the price is following what is obviously a computer algorithm-based trade. You can just see it. Those things don't happen as a pattern by accident.
It happens so often that if it was just a one-time occurrence, maybe, but it's just such a regular occurrence that you could lay really 3, 4, 5 days charts on top of one another.
Yeah, the bounces up are all on the same, 3-hour or so stretch of period. The patterns and wiggles that you'll see in the chart, have about an 80% plus correlation, just eyeballing it. It's just absurd. And this has gotten to the point where a lot of hedge funds and a lot of speculators who are just, large investors who have money to play with on their own can see this. And after the drive-by shooting of April 12 to 15, when more than 400 tons of gold were sold in a very short window of a few minutes by a single trader, representing more gold than any single human being owns on planet Earth, suggesting that it's either naked short selling in service of a central bank or actual central bank selling directly through a proxy or what have you. People aren't completely dumb and off the turnip truck in the finance world. It takes a lot of brains to be able to manage hundreds of millions of dollars or more. There are many, many people who have managed that level of funding, and they can see these patterns just as well as we can, but they don't want to talk about it because to talk about it to some extent actually removes the ability to make money off of these trades. And that's what's going on this week. We can see the silver in particular hitting that very easy to identify $25.25 through $26 level where the technical traders would begin to sell, and that's what we have seen. It's something we forecasted with 100% accuracy last Friday and going into this week with the equity shares.
So going forward here, I think a retest of 2250 is almost guaranteed next week, likely in the cards. And below that, the cartel, I'm sure, would like to break it down below 2250, but I expect some pretty strong buying to emerge around that, the 22 to 2250 level.
Yeah, and what happens typically when there's actual military strikes or some kind of big event, like, for example, 1987 when we had the Asian currency crisis, the first couple hours see huge amount of physical buying of gold and silver. And it overwhelms any ability to keep it capped. So we may, in fact, see that going into Monday if we do see cruise missiles flying out. But on Saturday,
right, I should throw an asterisk up there. A World War III starting over the weekend can put any technical price pictures right out the window.
Yeah, well, hopefully it won't be, that kind of conflagration right out of the gate. I mean, basically, the United States is talking about lobbing cruise missiles and punishing the Syrian regime as opposed to, full-on invasion or anything like that. But war has unintended consequences, and over the long term, or medium term, I should say, a couple of weeks to a couple of months, who knows what's going to spin out of this. It's going to be a mess.
I want to get right back to Syria here, but before we get away from it, Eric had mentioned about the technical traders predictably selling right into the about 25-20 level. And what's interesting is we've actually saw quite a bit of physical sellers emerge in that area as well. We had, for the first time in a while, we had quite a few people calling about selling back to us this week at SD Bullion, and our suppliers particularly had a conversation today that a whole bunch of physical silver was they had dumped on them, as the quote our suppliers used, right into the 25 level, and it's shown up in premiums and availability. 90% for the first time in really months, I think, is available at 4 or 5 of the major suppliers live and in stock. I mean, even just 4 or 5 days ago or a week ago, there wasn't any. Everybody was still out across the board. So most of the suppliers have 90% back in stock. Across the board, the suppliers are live on Maples and Silver Eagles. Most of them are live on the Philharmonics. Really, the only retail silver product that still is seeing a shortage right now are the 100-ounce bars, the Engelhard bars and the Johnson Matthey bars, and even the Royal Canadian Mint bars. They're not quite as tight, but there are a couple-week delay in the few suppliers that have them in stock here. So just wanted to update our listeners on the physical supply quickly, but getting back...
what's going to be interesting, Doc, is that 90% silver tends to be a really good indicator of what the stacker community is doing. And for the most part, the stacker community probably was all in, or the incremental buying is dependent on the free cash flow of a paycheck when it comes to stackers. And it's really not surprising to see a big burst of availability of 90% when we hit that technical trading point, because a lot of those guys were really big in terms of their speculation, or they're unloading. But what will be the telltale sign for us to look for, in my opinion, in the next 2 weeks, will be whether or not physical 90% starts to tighten up again, the premiums drift upward again, and it has the capacity of giving that signal pretty clearly, because there just is not a lot of it all around in the marketplace. And the supply that we see right now has been 100% supplied by sellers. It's not like something that comes out of the ground and is fabricated into new products, because they just don't make those coins anymore. It's not like a maple or
Exactly.
silver eagle. So folks, keep an eye on that over the next couple of weeks. We'll do the same, and we'll report back to you to see what happens with there. But that's going to be a pretty interesting indicator to keep an eye on.
And I think it has been indicative of the retail market as well. We had a lot of big buyers and, frankly, almost frantic buying as silver went up from 18 through 25, just consistent buying. But rather than taking advantage of the nearly $2 dip now, buying's really fallen off the table, as I think there's kind of a somewhat of fear, oh no, here we go again, we're going back to 18 and below here.
But do note that it was by the time $20 came around in the spot price of silver that we had giant premiums in 90% already. I mean,
exactly.
It was like $5 spot equivalent over by the time we were at 20. So the number of large buyers that would have been able to even fit through that window of opportunity is probably minimal. What we see now is probably people that even weren't necessarily picking up at the bargain prices from April forward, that probably were actually longer-term holders saying, this thing's gone back and forth. I'm getting up to that $26 range where old-time support has turned into resistance. I want out of here. And I suspect that it was probably supplied by people who had been in their silver from the $5 to $15 range, longer-term holders, as opposed to people who moved in recently. But who knows? That's not possible to prove.
Yeah, we'll see, as Eric said, in the next couple of weeks here, whether the 90% premiums particularly tighten up, as there's no new 90% being produced, and that's strictly a current supply in the market, buyers versus sellers. Moving on, obviously, to the biggest story of the week, the looming, hopefully not impending, but the looming invasion of Syria. We really can't call it a NATO invasion anymore. Last night, the UK Parliament voted down the UK's participation on Thursday night. On Friday, here this afternoon, NATO actually came out, and Dutch TV reported that NATO will have no role in any military action in Syria. So that basically leaves the French and the US to potentially attack Syria. But the other big story we had out today was a report. It was on InfoWars, but the original source was an AP and BBC correspondent who was informed by the Syrian rebels reportedly that they were the ones responsible for the chemical weapons, and that they actually had been accidentally mishandled by the group after they were received from the Saudis. So
yeah, the reporter's name was Dale Gavrak, reporting in this case for Mint Press News. And there's been a lot of blogosphere debate going on, saying, it's just an Alex Jones story and blah, 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 trying to discredit it. Well, it's not just an Alex Jones story. And in fact, as reported to this reporter, and I'll quote the key paragraph or key sentence in the report that was filed, quote, "We were very curious about these arms, and unfortunately, some of the fighters handled the weapons improperly and set off the explosions," one militant named, quote-unquote, Jay told Galvac. So, it's clear that something here is amiss. And we also have to put this into the context of earlier in the week, the United States basically doing everything it possibly could to set the conditions and push along the United Nations weapons inspectors' exit of Syria. And meanwhile, we have John Kerry and all of the other war hawks coming to the press and putting forth the arguments that, we have no doubt that there has been an attack, and that it's Assad's regime that's responsible for the release of these chemical weapons. And part of the official report that was made based that conclusion on YouTube videos and just basic circumstantial evidence, along with what they considered the information from a wiretap. And all of this stuff is the classic type of information that intelligence agencies use in a skewed way to, just as in the Iraq War, make the intelligence fit the circumstance.
Regarding those YouTube videos, in the official proof statement released by the U.S. today, they said that we assess the Syrian opposition does not have the capability to fabricate all of the videos. Physical symptoms verified by the medical personnel and the NGOs, and other information associated with this chemical attack. So because they couldn't have faked the videos, but the proof release, quote unquote, doesn't address whether they could have been the ones who accidentally set it off.
And on further context, to be able to prove, an attack using sarin gas, for example, is very easy for UN inspectors. You can just examine the corpses, look at blood samples, tissue samples, and there would be no problem whatsoever to have a definitive answer within a matter of days, if not just a single week. Yet here we have the war powers of Washington primarily, maybe the French, who knows who else, but particularly the UK as well earlier on, until the Parliament put a muzzle on their Prime Minister, arguing that we need to go to war fast, or that we need to do a strike to punish the regime fast. And there's no rationale whatsoever to support that argument. The only reason why the United States would put forward that as a strategy is because, frankly, they don't want to know what intelligence would prove. They're fearful of the United Nations inspectors coming up with information that would counter all of the propaganda that we're being shoveled on right now. It's a rush to war, folks, that cannot be disputed. I mean, there are certain facts that we know that are 100% fitting all of the evidence that anybody can see based on reading just generic news, and the United States rushing to war is not in dispute. I hope no one's going to make that argument.
And the problem remains that Russia is still ready to protect Syria and has moved their assets into the region. And if we do make any unilateral move, even just with the U.S., even if the rest of NATO and the UK is not participating, that can change in 5 minutes' notice if Russia and or Syria retaliates.
It could get really messy, and the unintended consequences of war can spin out into a much broader war, and that's really the big risk here. If the United States were to lob 15 cruise missiles into downtown Damascus and try to do something just for show, that's not going to trigger a response by the Russians, because it's actually in terms of the geopolitical realpolitik that Putin will be playing as a chess master. He realizes that to act in that kind of a circumstance probably wouldn't be in his best interest. It's better to just make the United States look like the bully and the idiot and do nothing, realizing that escalation could easily get out of control even if he were to respond to something similar to that. And there's also, in addition to that, some levers of control and influence that groups within Saudi Arabia have over the Chechen rebels within the Soviet Union's former territory and throughout Russia. And there's been some indication that those channels have been activated and put on notice to be potentially used as a weapon against Putin, in particular in the context of the upcoming Olympic Games. So there's a lot of layers to this onion.
But the fact remains, even if Russia does not immediately retaliate, Syria has threatened to strike Israel.
Right.
And then we have the other factions such as Hezbollah and the factions that are likely to retaliate against Israel. And Israel stands ready, and I fully expect would do everything in their powers to protect themselves. So once the first domino falls, there's really no predicting what can happen. Hopefully, calmer and cooler heads will prevail, but once the first big domino falls in the Middle East, all bets are off, in my opinion.
And to some extent, that's actually the United States strategy here, or better said, the neoconservative or neocon faction of the policymakers' strategy. They basically like to stir stuff up so that the factions within countries go into deep civil war, and it's a divide and conquer method of gaining more control, over a country without actually invading. It's the same method that's been used with Iraq. It's been used to some extent in Afghanistan. In Libya, Libya wasn't strong enough to the point where the United States wasn't too afraid of putting in brand new forces and whatnot, so there was fresh action there. But this is a pattern, and it's not exactly rocket science to be able to understand what's going on here. So, unfortunately, the leaders of the United States military do not represent the people of the United States. And it's truly unfortunate because for many, many years, for decades, the people of Syria had a great feeling of moral affiliation with the West. And the Ba'athist regime, despite the fact that the Assad family was very brutal in terms of maintaining their control, I mean, there's no defense of his dictatorship. The guy was brutal in many ways, but for the better part of the history of Syria in the post-colonial period, it was a secular regime. It wasn't a radicalized Islamic regime out to declare Sharia law and destroy Israel as a cult to Islamic faith. I mean,
which is what we have the U.S. backing in Syria with the Muslim Brotherhood and Al-Qaeda.
Yeah, that divide and conquer strategy is facilitated by going after the most radical elements, stirring them up like taking a stick to a beehive, and watching everything go off like a bunch of fireworks.
Right. It's really a good term to put it, chaos, and it comes really as a backdrop with the looming U.S. debt crisis. I think Zero Hedge had a report out yesterday that the U.S. is down to under 2 months left of the reserve funds and stealing funds from various retirement accounts and other things to keep the operations going after the debt limit has been passed quite a few months back. So we're down to crisis mode there. So really everything's kind of coming together here. So kind of wrapping things up. Gold once again, unchanged on the week. The cartel is just barely able to successfully cap it under 1,400 to prevent a weekly close over 1,400. Second week in a row they were successful in that after gold traded above 1,400 for really the majority of the week. And silver closing right around 23.50 here. So outside of the unknowable with the Syrian invasion, the potential here for silver to continue to correct somewhat here early part of next week, down towards 22.50. But both Eric and I are both in agreement that we still look for the correction to be brief and not a retest of the summer bottoms we saw in July of around 1180 in gold and 1818 in silver. So hopefully we'll get through the weekend without any major fireworks here, and we'll be able to focus on the markets next week. So for the Doc and Eric Dubin, thanks for tuning in to the SD Weekly Metals and Markets.
SD Bullion.